Well, good day, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this wrap-up is for Wednesday, the 1st of December, 2021. So as I look at the markets, what bloodbaths they're creating. Sometimes traders just want to trade because they love the volatility. Other traders like me want to trade because, number one, I don't like extreme volatility, and number two, I like a trend. All right, the extreme volatility in my career, I have learned to walk away from. Why? Because you can't control risk in it. And risk control is the first thing that any trader, I'm not talking investor, trader has to understand. And if you can't control the risk, there's better places to be. You don't have to agree with me, but I'm telling you this from experience. I have been telling my paid subscribers now since last week, time to not trade. Let's let the dust settle on all this right now. I'm still in that place. There have been opportunities, especially to be short some of the currencies. But as time would have it, I'll wait. Did you look at the action today in the Dow? We'll show it to you in a minute as we get to it. You didn't realize at one point it was up about 500-600 points, and then it fell from there, probably at a range today of near 1,000 points. If you think you can catch all that, great. I'm happy for you. I don't think most people can. And you don't try, because in order to catch it, you had to really sell it on the way up to buy it on the way down, right? Okay, and as it's going up 500 points, if you're short and it's when it was 200 points, now it's up there, you're panicking. These aren't normal moves. We got the first case of Omicron. It happened in California. The good news is it's happened. The good news is the Fed told us what they're going to do. The good news is we're going to get the jobs data out of the week. The good news is that we just saw the Fed notes. We saw that there's wage pressure, but the Fed doesn't think this wage pressure is absurd yet. That doesn't mean they're not going to pull back. Again, you heard it very clear in testimony at the House Financial Committee as Mr. Powell and Fed Treasury Secretary Yellen were testifying that no, they are looking at these markets. They're going to taper. They realize that the inflation is there and asked the questions. It was the same type of thing. And of course, Ms. Yellen was drilled very hard on how she can pay, or the Biden administration that she's behind can pay for this new bill that they want to put through. And I'll give you the secret. It's such an easy secret. 80,000 new IRS agents. These are her words. They're going to hire them. They're going after you and you and you and you. Whether you got a problem or not, they're coming your way. Do you honestly think that's what we need in our life? Most people don't need that. That's what they want to do. They're going to find the money with the cheats. I guess we're all cheats. I guess that's the name of the game. I promise you I'm no cheat. Okay, I don't want to be in that game. But I don't think it's right. I think there's got to be better ways to do it. Do we need all those programs with an inflationary background? That's the big question that's the different Congress people were asking today. So just things, I'm just a commentator talking about what I see out there. On the energy market, the teleconference tomorrow, which way's OPEC going to go? Jobs report Friday. Metals, we keep hearing about inflation. Why isn't gold running if that's the story? You got to ask yourself that question too. So when we come to the chart action, you're slipping back, and I've got to point this out. Each time recently this market has fallen back to the 18-week average of closes, it has proven to be a buy, and in short order, the market's gone up to new highs. I know you're going to tell me that past performance doesn't guarantee future. I'm with you. But you haven't ended this bull market on a first challenge of an 18-week average of closes. I contend that's where the pros are going to buy the market again if it hits that. When I look at the daily chart, we're in a washout. So to get to that 18-week, you got to take the weekly chart down. Does that make sense? And here's your washout in the chart. You've got the pattern of lower highs, lower lows. For all purposes, the bull market ended when you took out this low right here. Let me just show it to you. You'll get to me with the slow stochastic in a bit here. When that was taken out, you broke the pattern of making from this point in October higher lows, higher highs. It was a heck of a run. So now the market's giving you a correction. Okay, it can get a 50% correction. Why not? But that doesn't mean that you've ended anything. It means that you're taking the excess out of the market on this particular part. The 100-day moving average of closes is right here. And where's that Bollinger Band? Well, now you can't count today, but you had 2 days under the Bollinger Band already. So I give the market for tomorrow a 3% chance, that's all, of staying underneath the black line. The day after it'll be 2 and then 1, which means 99% chance it's going to move to the right-hand side. That doesn't mean it's bullish. It just means it's overdone. Do we understand it? Trend down, bias down, and you're oversold. You're not embedded. You're not even beginning the process of locking in a bear trend. It is a market correction. I don't know how deep it is, but as a chart technician, sometimes you just walk away from these. In the NASDAQ, this is where the support should show up, the lower Bollinger Band. When you first hit it, that is typically where the support is. So what the market's actually done is it's gone from the upper Bollinger Band that it hit here just recently, a new all-time high on November 22nd. Doesn't that sound far away? It's not. That was just over a week ago. And it's gone to the lower Bollinger Band in the process, gotten itself oversold, and it's got a bear market going, but it's hit its downside target. That's my definition of it. In the Dow, you've been riding the lower Bollinger Band. This is the Gorilla Glue trade. This trade began all the way back here. And I'll show you where the market ended. See, this is where you lost the slow stochastic. You normally go, when you lose it, to the 18-day average of closes, the red line. Okay, here we go. That's the first time that it hits it. You've now satisfied that. But what the market did is it went down, hung around, and got to the approximate lower Bollinger Band, played games with it for a bit here. This is November 26th. Doesn't that sound far away? It's December 1st. It's 5 days. And the market falls down and it starts hitting that band. And I thought that the first major support should be right here. The combination of the 100-day average and the Bollinger Band. That's a reason to be out of shorts. Got it? It is not a reason to be long. To be long, I need the trend up, the bias up, and momentum up. I don't have any of that. But you're oversold. You've hit major support. And instead of that, the market hung in on that band and has now gone down. And we talked about this. Go back to yesterday's video, the day before, that it's probably, once it started, kept going down, maybe the 200-day average would be the next support. And that's where I think you're at. So you're at another support level. Again, you're not embedded. You're terribly oversold. In the Russell, you did the same. You locked in on the Bollinger Band. Watch it. This is the Gorilla Glue. That's what I call it. And this one I thought would hold here and eventually give you the bounce because you were already oversold. Instead, it just kept hanging in and you've washed the people out. But these ranges are huge. If you look at the range today, 2255.90 to 2136.80. If I come to the Dow, the range today, and if you think this is easy to trade, God bless you. 34,986 to 33,928. It's a 1,000-point range. And you're trying to make heads and tails of it. I get it. It's difficult. Real difficult. So you do this. I put my hands in my pocket and I tell my traders, okay, we're going to live for another day. And that's what trading's about. Trading's about coming in on your terms. Even then, you've got a great chance of being wrong, right? But get it on your terms and don't go into the crazy volatility when you say, oh, well, I went short and I could have caught it. Yeah, let's assume you went short. At which point in this, if you got over the Bollinger Band, at which point of this 200, 300, 400-point range where you're crying, uncle, I'm bearish, but now I'm out $2,000? You tell me, because that's what happens on days like today. And I tell you this owning a brokerage firm because I go through my customers, I live with them as they do these things, and I hate it. You know, that's what they do. It's their money. In the VIX cash, a whole different pattern, and I'm aware of this and I'm very concerned. Normally, the pattern that we've been getting is you'll go up to the Bollinger Band and you get sometimes a spike over it, sometimes, not every time, sometimes you hit it, just like here, and you fall right back. But nowhere have you hit it, come down, and made a higher high the way you're doing right here. That's a change. Be aware of change. Something big has happened. That something big is right here. I already know what it is, and so do you if you've been paying attention. You're getting your crossover. On Monday, the 18-day average got over the 100. That's the first sign of bullishness. But I'm still saying, okay, maybe the market's going to fall back into all that. That's what I was saying because momentum pointing down. Then the market on Tuesday, this is yesterday, now I got another crossover. This darn thing's getting over what? It's getting over the 18-day average of closes. Uh-oh. And this is today what happened with it. Now, you've hit the new high, you're over the band, probably not going to stay there, but it's a change of pattern, and that means something has changed in this market as a chartist. This insurance premium all of a sudden came very much alive. In the 30-year bond, the Fed's told you, I'm laughing, the Fed's told you they're ready to raise interest rates. I mean, that's what Fed Chair Powell said. They're going to get rid of all that, and yes, they've got their tool. Yet you keep breaking interest rates. Every time you go up in the futures, rates are going down. It's an inversion market. Look at this. So, people fearful about the stock, stock market buying? Could be. That could be the game that the market's playing. I don't know. I really don't know. And I sit back to learn, and then I'll trade. I'm a chartist, so to me, a chart's a chart. The environment of the chart I care very much about, and sometimes you just walk away. It's like going into a major government report. Why? I always ask myself, why would you do that as a futures trader? If I'm an investor in Apple, what do I care? But that's an investment. As a trader, I care about certain things. Earnings, I care. Okay, so the dollar index, lower highs, lower lows, right back into the support zone. The trend is down, the bias is up, and the market is working, present tense, off an overbought condition. Till that's out of the way, you can't say much more than that. You got to have the numbers under 70. At the same time, you're into the resistance in the euro. Makes sense to go the opposite way because the weighting of the dollar index is about 40% euro currency. When you lost the embedded reading, folks, watch this. That was the beginning. You're going to that 18-day average, okay? Flip-flop on the dollar index. British pound. The market's so far been a sale, but you lost the embedded reading. I want no part of that anymore. I think it's time to go to the sideline in that. The money was made yesterday by those that sold it right, covered at the Bollinger Band, and lost the embedded reading. Game over. Bitcoin. Again, you lost the embedded reading. I'm looking to see if the market can get to the 18-day average. Yeah, it either re-embeds, but an oversold condition, I don't think it attracts short sellers. In Brent versus WTI, now, what do you do going into these when tomorrow you have the teleconference and they'll tell you what they're going to do with the energies? Right now, this is a pretty bearish chart. It has been riding. This is that gorilla glue. It has been riding this lower Bollinger Band, and when you have that, you got a heck of a bearish situation, but it's oversold. If it were embedded, I'd be even more bearish. It's not embedded. You have the same dilemma facing you in the WTI. These markets are in the bear camp right now, and that's the hardest thing. Why should OPEC take this market that was, example, Brent was just pushing the $84 area? You're 69.82 and add 400,000 barrels to it. That's the dilemma the market faces and that OPEC faces tomorrow. I'd rather wait and see what they're going to do. I'm not smart enough to guess what they want. If I'm on the committee, I'm going to tell them, let's not go ahead with the 400,000 barrels. That's what I'd be doing. But I'm not on the committee. and they have to make up their own mind. They've been releasing studies that Reuters put out. I put them in my morning subscriber videos, my written updates, and I showed the clients what this all is. So they're making their own argument how the market's going to be in surplus. You heard me, surplus. And they want to add more oil? I don't know. Nat gas, okay. We haven't had any bounce on the cold weather, and guess what? It's still going to be 58 degrees tomorrow in Chicago. This is December 2nd. I've lived here all my life. This is not normal weather. And we've had no snow, and the snow keeps going north of us. Now, other parts of the country, I'm sure, get cold. We've just been very, very fortunate, and we're a big city that would be using a lot more nat gas. I mean, it does get cool, and it does get cold in the morning, but then it warms right on up. So these are the problems that you've got, and your problem is I'm going to end my Cyber Week sale now. So if you're interested in getting my charting course for free and or my Bollinger Band course, you decide what you want. It just takes a 1-year subscription, which is really inexpensive to my research. When you do that, you pick which of these courses you want. You can give it away as a gift, take it yourself, and you tell us when you want the course to start. The subscription would start right away. Remember, how to get to that point is you're just going to come up here with your cursor, click on it. There'll be a icon that shows. On that icon, just click on, choose what you want to do, and away you go. If you have questions, you can always call our staff, 866-973-2077. We'll be happy to answer your questions. But this, give you an idea, the course itself, the charting course, is $249.95. A 1-year subscription to my morning futures video is $156. I think you got a good deal going there. I'm Ira Epstein. You have a great day, and I'll talk to you tomorrow.